Good day, my name is Ed McFerran. I'm House Counsel with Tax Deferred Exchange Services. We're a national qualified intermediary company. We provide services throughout the United States. Our headquarters are in Tacoma, Washington, Western Washington, and we provide those services throughout the country, Alaska, Hawaii, even the Virgin Islands. Our topic today is seller carryback financing. This is an area of practice that we are well accomplished. And this general video will provide you some mechanisms of understanding how seller carryback financing can work in tax deferred exchanges. Let's use a situation where we have a seller who is not providing a sale of the property for cash. We have a purchaser who's providing maybe a very substantial down payment to the seller, and the seller is receiving money during a time period afterwards, which we generally refer to as seller financing or seller carryback financing. This provides an opportunity for the seller to provide a variety of strategies associated with the tax deferred exchange, and one of the strategies is where we take the down payment and that becomes the source of the tax deferred exchange money. In that case, we bifurcate the transaction, which means we break it into two parts. And the client completes a tax deferred exchange on the cash down payment portion and pays capital gains tax over the time period that they receive the money on the seller carryback portion. That would be the simplest arrangement, and that's an arrangement where the transaction is divided into two parts, and we use the cash for the acquisition of the replacement property. The exchange value is going to be commensurate with the amount of cash that's received, and it's going to be a partial exchange as to that value, and of course it's going to be a deferral as to the down payment, but they're going to pay capital gains tax as they receive the money under Section 453 of the Code for installment sale treatment. Another method of completing a full tax deferred exchange where we have seller carryback financing is to take that same arrangement where we have down payment. Of course, the down payment funds immediately go into the exchange account, but another strategy is where we sell the promissory note and debt instruments to a third-party purchaser. In many cases, that third-party purchaser happens to be our client, or happens to be the client's self-directed IRA, or happens to be the client's pension and profit-sharing program, and they buy the promissory note from us, and as a result turn that into cash, and we take the cash that came from the down payment, add to that the cash that came from the sale of the paper, and we complete a tax deferred exchange utilizing the cash proceeds from both sources in order to complete the transaction. That's a very common scenario that we use in these seller carryback financings. There's one last scenario. Same type of fact pattern. There's down payment, seller carryback financing. In this particular situation, we find a seller of the replacement property who is willing to take by assignment the promissory note and the deed of trust, if that's the instrument that's used as a mortgage, and it becomes a portion of the down payment for the acquisition of the replacement property. This is a little bit difficult to accomplish, but it can be accomplished in a minority of cases. It is one of the strategies that's used, however, not as often as the other two strategies. So in this instance, we would have the exchange of the cash, and we would get the value for the promissory note and deed of trust, and exchange that value for the exchange replacement property. In all three of these areas, there are traps for the unwary. In all three of these areas, they require some advanced planning, and I'd highly suggest that you talk with one of our staff in order to take a look at your specific fact pattern so that we can provide you specific advice so that you can move forward in an appropriate fashion. Again, seller carryback financing is a portion of our practice. We're highly accomplished in this area, and we can provide you advice specific to your transaction. Good day.